Happy Friday, everyone. Well, since February decided to rear its ugly head for the second year in a row and bring us a late winter, I thought I'd lift your spirits and bring you this week's commentary from sunny Santa Monica. My wife Jamie and I decided to spend a long weekend down here because we have a baby boy coming in April, so we know that we're about to get thrown into it again. So we thought, let's get out of town, enjoy some sunshine. And what I wanted to focus on today was the idea of how you frame decisions within both your retirement plan and even decisions that you're making around your investment portfolio through the lens of math and emotion. How do those two components play into your decision making? We talked about in the past, the same part of your brain that gets triggered when you're in mortal danger also gets triggered when you lose money. My idea is getting chased by a bear is literally the same thing as getting chased by a bear market. And we see sometimes very smart, capable individuals can tend to make irrational decisions around their financial picture when fear comes into play. And last week, the last week that we've had, is a perfect example of fear in the marketplace. We're hearing right now around impeachments, which is over at this point, but a lot of fear leading up to that this week. The coronavirus in China, and not only is that going to spread, but how is that going to affect the global economy? And we've seen some volatility in the markets that have come out of that. So when I've been having conversations this week with clients around how they're feeling not only about their portfolio, but how that affects their financial plan, we've really tried to frame the conversation around math and emotion. We want to look at most decisions, especially around the portfolio and the portfolio construction, from a math perspective. What are the fundamentals of the economy telling us? What are we seeing in terms of our long-term global outlook? How are we looking at certain decisions that need to be made in the portfolio through the lens of fundamental data, not emotion? But that doesn't mean that we don't expect the average client to just take those emotions and put them away. We just want to help clients understand where those emotions may be coming from and why it may not be the best idea when you have some scary headlines like we're having right now to just go put all your money in cash. That's certainly not what we would ever want to see a client do. So from a portfolio standpoint, understanding that the idea of look at the math and help us show you what the math looks like that is going to keep us on the right path from an investment standpoint, and putting some of those emotions aside that may pop up in times like this and with the scary news headlines that we're seeing. Now, we look at it a little differently from a planning standpoint. Math and emotion play different roles. So when it comes to how we're looking at decisions within the portfolio, and I've talked about in the past the idea of the 5 things we can truly control in our financial lives, and that's saving, spending, the timing of certain events, major purchases, retirement, risk. We can control risk in our portfolio, but obviously we don't know day to day what the markets are going to do. And the last one is legacy. What is it all for? Now, when we frame decisions within a retirement plan through that lens of math and emotion, we can look at things a little differently. I had a wonderful conversation this week with a client who was looking at retirement. So we are finally going to move from the accumulation phase of this person's investment life cycle to the distribution phase. And we are looking at some decisions within the day-to-day budget. Now, there was a car loan involved. And basically, to make a long story short, there was a lot of emotion playing into whether or not to pay off this car loan and truly be, for the most part, debt-free in retirement. Now, from a math standpoint, the interest rate was low, the payment was very affordable, but from an emotion standpoint, it was just going to make this individual feel much better if that car loan was paid off and they truly could be debt-free in retirement. So that's one of those time frames where, hey, from a planning standpoint, I wasn't as concerned about what the math said. I wanted to make sure that this individual felt really good going into retirement and emotionally was all on board with that next phase. So there's a big difference between how we look at emotion and math from both a portfolio standpoint and from a retirement planning standpoint. But the more that you can understand how those two factors play into your financial life, the better you're going to be equipped to make decisions. Couple other items to hit on today, and it goes right in line with that idea of risk reward and how we navigate these more turbulent times that sometimes we face. We got a couple of events coming up, one specifically that I think may be of interest to some people. We have a lunch and learn because we're doing quite a bit of those now, every other month or so. So on February 27th, we're doing a lunch and learn focused on not only identifying risk in a portfolio, but also understanding your specific risk tolerance. What truly can you handle and what should you be handling within your portfolio? So look for that invite to come out over the next week or so, and basically it's just going to be the first 16 or so people that sign up. If you're not on our events list or our mailing list for any of these, you can feel free to go to 10capital.com and sign yourself up. And the next one, which is just more fun, just kind of putting it out there on the calendar for March, our March Madness event. Always a great time. We come together with friends, clients, colleagues, and just watch basketball and have a good time. That's going to be Friday, March 20th. So look for the invite for that one coming out really soon as well. Well, I'm going to get out and enjoy the sunshine with my beautiful wife. Thanks everybody for tuning in this week, and we will talk to you soon.